Over the weekend, President Trump proposed 50% tariffs on steel and aluminium. Today we'll be sharing two ASX stocks to buy that could benefit from these changes and one stock to dump that might struggle if these tariffs are imposed. It could be a good thing that manages to find support from these lows. If it starts to go down and take out these levels, then this stock is gone.
The risk to reward ratio right now, we've got around that 30% upside, whereas we only have about a 17% downside.
Welcome to Wealth Within's Hot Stock Tips. With over 2 decades of experience training over 30,000 clients, we bring you what actually works in the stock market. Joining me today is Wealth Within analyst Pedro Vinales, and I'm senior analyst Janine Cox. So let's dive straight into it. Welcome, Pedro. How are you today?
Hi, Janine. I'm great. And yourself?
Fantastic, thank you. We've got some exciting things to talk about today. There's so much going on in the world of the stock market.
Oh, yeah, especially over the weekend when the big man himself, Mr. Trump, proposed, because they haven't got through yet, these tariffs. So let's see how this plays out.
Indeed. Now, President Trump's recent announcement to double US import tariffs on steel and aluminium from 25% to 50% has sent shockwaves across the global market. While Australia does export steel and aluminium to the US, this represents a relatively small fraction of Australia's overall exports to America. In fact, the bulk of our trade partnerships are tied to China. For Australian mining companies, this could be a tale of two sectors. Resource giants may face mixed fortune, depending on how the tariffs play out, while other industries could capitalise on market shifts. Now let's dive into two stocks to consider buying, and one that's we're going to potentially offload as we break down the charts to highlight the key levels for you. Now, Pedro, BHP is our first one. This one we've said we're going to dump, and this is a bit controversial, isn't it? Because there are so many people that like to hold their BHP shares.
Yes, and I know that for yourself, you're probably going to get the tissues out after this because you're quite fond of the resource type stocks when they're trending, that is, though.
That's so true. Now, I've had people say to me, oh, why do you hold stocks if they're trading sideways? But people do. They don't want to let them go. They want those dividends coming through, and they're optimists, aren't they? If they've seen a stock rise significantly, which BHP has had stellar runs in the past, they're expecting it to do the same. But hey, we haven't seen any growth out of BHP for some years, and it's really looking doubtful with these recent announcements. So how about we take a look at the chart and see what's going on? Now, if we look at these two highs over here, this is really the clutch point for BHP. This high in May 2008, and the second one was in April 2011. We know that the whole mining sector resources went into a downturn during that time. And look, our analysis indicated that BHP was likely to continue to rise, but things change. You have to adjust your analysis as the information comes on, or there's more information on the right-hand side of the chart. But what we can see here is that BHP is really stuck below this level at the moment. And the concern for me right now is with all of this playing with tariffs, it's really going to play on stocks like BHP. I mean, BHP has got its potash production in Canada, and the war that we're seeing, Pedro, seems to really be playing around what's happening between the US and Canada, doesn't it?
It does. I mean, they're calling it the taco trade at the moment, which is Trump always chickens out, apparently that stands for. To me, the taco trade is really in between Canada and Mexico, with America in the middle. And it does seem to be very heavily, geared towards them.
It doesn't seem like Trump is backing down anytime soon, and that seems to be weighing on a lot of these stocks right now. And if we go back to BHP, we can see that more or less it's been trading sideways since 2021. It's just done nothing. And if anything, it's significantly down from this high here, which is a real concern right now, especially given that we're just coming into this period to see a test of that recent low. It could be a good thing for BHP if it manages to find support from these lows here in July 2022. But if it starts to go down and take out these levels, then this stock is gone, and it will be, a more serious decline on the cards if that happens, I think.
Look, I totally agree. And, that $40 level that you've outlined is a critical level at the moment. And if we go to my chart, really, I see it very simple, right? We have broken this long-term uptrend that we have established since 2016 when we saw that mining boom. It has broken it, and now we are in a long-term downtrend. And the key levels for me to watch on the monthly chart here, of course, that $36 level that you've outlined, if it breaks below that, the next one is going to be that $32 level. If we do have a rise above that $40, then the next one is $50. But we really need to see it break above that downtrend that it's established. Now, on the weekly chart, I've put a bit more of a tighter momentum line that it needs to break above. And you can see volume coming into this down move over here. And it really doesn't get any higher until you see these sell-offs. So it's just not giving us enough direction at the moment, is it, to constitute a buy?
I mean, what's interesting about your analysis on that monthly chart is where that trend line has run all the way up that rise. And, Dale talked about this in his book, and we saw this happen stock after stock prior to the GFC, where stocks tumbled below these levels and then went into much bigger declines. So, if you haven't had your chance to get Dale's book, How to Beat the Managed Funds by 20%, please make sure you get a copy and have a look how the trend lines work, because over the next 12 months to 2 to 3 years, this is going to be really important for you when you're assessing whether to continue to hold stocks or not. So let's just take a look, Pedro, back at your chart again for a minute. We can see there where it actually crossed. We've got that the downtrend and the uptrend sort of line crossing to each other, and it's really stuck, like you say, isn't it? But there's just so much happening there on the chart that it has to do a lot to get through that. So what sort of big news would we have to see for BH's share price to recover?
I think it needs copper to save it, personally. It is investing heavily into the copper space. If it does successfully bring back its copper mines and be able to expand in that sector, I believe that this will turn. But really, the chart will tell you everything. And, I'm getting students sending in their back testing of the stock, getting ready for the time that it does turn around, because that's the key thing here. Now is the time to be looking at it. It's a dump right now, but eventually this is going to be a great stock and you'll make great money on it.
Yeah. So to people who are continuing to hold it, eventually, if it takes out that low, should they just give up at that point and dump it?
The $36 low?
Yep.
I would say that's another critical level. So maybe not just relying on that. There's more things in this stock to really constitute. You probably should have been out already.
That's right. I was just going to say that it was probably already a dump some time back, wasn't it?
It was really late last year, early this year. You should have been out of this stock just
even
waiting.
even earlier potentially. Yeah.
Yeah, there's many rules that we can see here that you could have exited earlier. So, it really depends on the people's holding strategy. We teach more of a, trading strategy, which would have had you out already.
Yep, exactly. All right. How about we take a look at the next one we've got on our list, which is S32. Now, S32 has got some opportunities, hasn't it, really? Some stocks are benefiting from the tariffs and others are really struggling, and there's a lot of uncertainty at the moment in the market. But S32 doesn't really look much better, though, from a monthly chart point of view, given it's just been in decline all the way into the low in April. It, too, looks like it may be starting to turn around, but where does S32 benefit from this, or how have they strategically positioned themselves here?
And that's the key thing. They are investing heavily in the US. That's information readily available on their website. Their main operations are in South America, Australia, and South Africa. So they are going to get hit by these tariffs. But what I find interesting is the technicals on the chart, because the technicals are going to get you in before the news comes out that this company has turned around. And that's where we have our edge. And that's where our key benefit is, by being able to read a chart.
Yeah, exactly.
My key levels at the moment are $2.50, where it just found support at earlier in April. And this has been a level that was established even as far back as 2019. And have a look at this. So I'm going to expand out the monthly chart so you can get a better picture. That low was established even in 2016, and it was actually around the high when it first came out onto the market. So this has been a very critical level, and it's just found a base there. And I would say that the next key resistance level is $4. So if we have a look at the risk to reward ratio, right now we've got around that 30% upside, whereas we only have about a 17% downside. So that's a 2-to-1 ratio there. However, a little bit of caution advised as it hasn't broken this downtrend line yet. So a little bit more of a conservative trade would be above that downtrend. If not, you could maybe look for some opportunities on the weekly chart, but it's not saying anything at the moment, although we are seeing volume coming into it.
Yeah, I mean, that's a really good couple of points that you've made there on S32. Just looking at the weekly chart on my chart, I just wanted to have a look a bit closer at some of these support and resistance levels that we're talking about. And we can see that little sideways move over there in 2021. And then, of course, these recent lows that have come down here to that 280 level. It looks like it's reversed around that point, but as you said, it hasn't really proven it yet. It hasn't come back and tested that level yet. So I guess that would be the first thing to wait for, a bit of a pullback to test that level again, just to make sure that that bottom, has a high probability of holding. But also there's a little gap up here on the weekly chart that it may just push up and fill. So if it could go up there first before it actually pulls back, we just have to wait and see. But I think with the announcement about Trump's tariff, the market just sort of says, puts the brakes on and says, well, hang on a minute, we've got to reassess all this. And so that could just slow the share price down until it gets a bit of direction and the dust settles.
Mm-hmm. Yep, I totally agree. That is a very key level. I'd like to see a bit of a retest, but if this thing gets going, it trends very nicely.
Does look good. All right, and our next stock, and I was saving this one for last, BlueScope Steel. I mean, this has such a good story in terms of its strategic position in the US. Pedro, would you please share with us a bit of information about BlueScope?
Yeah, so I believe that they have 4 operations in America actually producing steel, and 50% of their revenue actually comes from America. So we often think of BlueScope as an Australian company, but really with that half of its revenue coming from America, it's no wonder the stock is up almost 7% today on these news of the tariffs, while all the other steel plays are down to the likes of 3 to 4%. So they're well positioned if the tariffs go through. If they don't, they're still well positioned.
So it's held up pretty well compared to S32. Obviously different stock, but I mean, that level there is really quite nice for it in terms of holding it up well. But at the moment, it's really stuck in a sideways range. So like BHP, it's gone sideways since 2021. Although BHP has been sold off more from its high, this stock has gone sideways. But just the potential is what really is mind-boggling here. If this stock is able to get through those highs, it's just mind-boggling in terms of the upside that we can see on the stock. So if we were to look at the first level, potentially you're talking around 30-odd% if it keeps going in the same sort of vein as what it's done. Because once it broke out of this low here in 2015 and went on this huge trend, it's come back and retested, and it's done so a couple of times, come back and retested. We're now seeing a very different move to what we've seen in the past. This is not like any of the other moves. And I think once it breaks through, and this is a critical level, so it's not just, as we talk about in the course, this is significant. Once it gets through this one, there's not a lot holding it back, is there?
Oh, definitely. And there's a very interesting pattern actually that's unfolding if our students are watching from Module 5. And those levels that you've outlined are exactly the levels that I have. So $19 for support, $24 for resistance. And I believe that's where it's actually finding some some resistance even today with its big move. But I just wanted to highlight something as well on the monthly chart here. So I'm going to expand that out. And I've got a momentum line that I've drawn here from the low in 2012. And the stock seems to travel around that momentum and it always springs back to it. And it's done that beautifully, even the last couple of times. So back in April, December last year, and October 2023, it's always finding some support around that level. So it could come back and retest that momentum, but it seems to be tracking it pretty nicely, and it spends more time above that momentum than it does below it. Anytime that it does dip below it, it just wants to come back above it. But as we know, with stocks, eventually they get tired of that level and they just go off parabolic. So it could have a couple of more retests of this momentum before it takes off. And like you said, it's got huge upside, this stock.
Yeah, and I mean, we're going to know pretty quickly. This is what's exciting about this time right now, is that these stocks are really coming to a head in terms of knowing when they're likely to turn. But obviously a move above this, if we look at the short-term high there in May, a move above that will be the first sign that it's on its way. It's got two highs here. It is significant, so therefore, you know, the better place to wait, maybe to wait until it proves that it's actually going to get through that level. On the downside though, this low here at 1898, if the stock comes back to that, and it's a fair way away at the moment, I guess we won't know for another couple of weeks. If it starts to head back closer, below $21, closer to $20, then I would be thinking that potentially it's going the other way. But until it does that, it still looks like it's got huge potential to break through again.
Yep, I agree. If it finds some solid support around that 22, I mean, like we said today, it's trading at around that 24. If it breaks above it, it's all blue sky. Well, kind of blue because it has traded to those levels in the past. I mean, we're talking about back in 2007. So yeah, we're waiting for a break above 24, 26 being the next level, but really after that, it's all dandy.
Yep, great stock. So blue sky for BlueScope, is it?
That's right. Blue skies for BlueScope, kind of grey because it has traveled there before. Yep. But that's the beautiful thing about it, because these levels have been established in history, so we can actually measure them using technical analysis, and we can have our levels and project our levels to see where the stock may find resistance even in the future.
Yeah. Even so, I mean, the most important thing obviously is to know how you're going to get out, isn't it?
Exactly. And that's the rules that we teach, just basic rules, basic pattern analysis that you can use along with key levels that you can use to actually get out of it. Because that's the hardest thing that I find our traders or traders that come to us find hard to do is sell. I mean, it's easy to buy. You can buy any share. You can, fall in love with the story, but you just don't know when to sell.
And how would you rate BHP, S32 and BlueScope Steel in terms of the degree of difficulty in getting a strategy that's consistent?
I would say that these three are fairly low in terms of the skill level. Maybe S32 is a little bit more intermediate, but BlueScope and BHP, I mean, BHP, you're talking about the number 2 share in our market in terms of market cap. It's huge. So, I mean, it has been a bit difficult in the last 5 years since it has tracked sideways, but it's a very liquid stock, very easy to start with. You can dip your toe into the market with a stock like that quite easily. Even BlueScope, it hasn't made any huge moves in the past that would kind of, get you out or wipe you out.
Yep. And there are key rules, aren't there, that really will work better, applying what you've learned in the course that actually help you trade BHP, BlueScope and any stock really. But I mean, these ones, you say that they are big liquid stocks, so that in theory it should make them easier to trade, but they're not always consistent in terms of the rises that they have that allow people to do it. So some people think that they can just apply a set of rules that one size fits all to all stocks and then they try to trade them that way. It's not going to work that way.
It's not. I totally agree.
Now, if you want more hot stock tips, check out our video, Big Moves in These 3 ASX Stocks.